So the stock market has been seen as many things in the last year. I've heard people call it a casino, I've heard people call it rigged. It's retail versus the institutions versus hedge funds. There's a lot that happened in the last year with the stock market. And despite all the issues we have in the economy, the stock market has been seen as one of the easiest places to make money over this last year. And well, if you participated in the stock market anytime after March 2020 last year to March 2021 this year, it's been pretty good. Stocks have been moving up and away. Speculative investments, penny stocks, the worst of the worst companies have seen massive returns, leading people to believe that they're a genius in this bull market. And you can see the countless of channels that popped up here just on YouTube in the last 1 year. These people have never invested in their life before. These people literally saw an opportunity where they're making money in the stock market and they can talk about it on YouTube and, talk like they know everything about it. And that worked extremely well. A lot of these channels were hype channels, and honestly, they've done really well. They made a lot of money in the last year, not only from their investments, but from YouTube ad revenue as well. And hey, more power to them. They saw an opportunity, they took advantage of it. I'm here, I've been making videos on YouTube since around 2017. I've been investing for even longer than that. So I've kind of seen a little bit more to the market, and I realized that 2020 was not a normal year. Now, this is what the Google Trends chart of the search term stocks looked like over the last few years. We had a few spikes here and there, a few dips here and there, but it was relatively flat. Then came March 2020 and we got a massive spike in interest in stocks. Everyone had heard of buy the dip, that was engraved in people's heads, and many new investors got into the market for the first time buying the dip. And what happened after that? Stocks just kept going higher and higher and higher because March 2020 was the bottom in the market. So you could literally throw a dart. It may not even be a dartboard there, but you just throw a dart and you would have made money in the markets. But then, we got into summer, things started cooling off a little bit. Elections started coming around, volatility entered the market again, uncertainty entered the market again. A lot of fear was starting to build up once again, and these investors were like, we gotta stand our ground here. This is a crash in the market. We gotta make sure that we dollar cost average, buy the dip, just keep going heavier because that's how you invest. And guess what? This was another lucky break because we saw a massive spike just a few months ago, peaking in early February after the whole GameStop mania and SPAC run. So all those bets that people were doubling down on in late 2020 with the speculative investments, with the penny stocks, with the SPACs, again made a ton of money. But since then, we have seen a sharp decline in interest in stocks as a whole. These so-called easy money investments have lost people a ton of money, many of them down 20-30%, and many of them down 50% or even more. And now this all brings us back to levels that we were at pre-March 2020 before everything just went haywire in the markets. And to me, as a long-term investor, this is probably the best thing we could have right now. When the market is hot, valuations become irrational. Independent thinking becomes difficult because you're ridiculed for anything that doesn't go with the narrative of the market. Hype is everywhere, and even the best of investors tend to make some pretty poor judgments in the market. And hey, I'm also victim to this, guys. I am not innocent in this game. I also fell trapped to some of these SPACs, to some of this hype that's out there, but the good thing, at least because of my past experience, was that I was able to manage my risk. I have speculative positions only 5% of my overall portfolio, and that's where, these bets like Clover Health, for example, sits in. Yeah, I know, Clover Health, not the best investment. And here's the thing, over the last, I'd say 6 months or so, the comment section on YouTube has become extremely toxic. But the good news is, after this recent wipeout in the speculative stocks, high growth stocks, these, story stocks that have absolutely no fundamentals, a lot of these trolls that were just in the comments just to bash people, be negative, and just not contribute to the community, all these people, they're gone. they're gone. They are pretty much wiped out. They probably moved on to crypto now. That's probably the next thing that's hurting them. And now that leaves us, you and me. If you're watching this video, that means that you are serious about your investments. You weren't just in it for the hype, and you are going to do well long term. What we've seen, guys, in the last few months, especially here in 2021, with some of our high growth beloved stocks, was a sharp correction. You could even call it a crash because it corrected quite steeply. But it was just that. It was a correction. Valuations were just way too stretched. There was way too much speculative money in these bets, and the market pulled the rug underneath us, and we saw massive declines in a very short period of time. But like I said, the good news is that if you're still here, that means you withstood that drop. You're coming out a better investor because of that drop. Because let me just say this, if you are able to withstand some of these 50-60% corrections in some pretty decent businesses, you definitely have what they call diamond hands, and more power to you, honestly. And hopefully, sincerely, I hope there weren't too many losses in your portfolio. I'm sure there's going to be a few here and there. There are a few in my portfolio. The overwhelming majority is still doing fine, but a lot of the speculative bets, yeah, they're still hurting quite a bit. But anyways, now starting today is when true investing begins once again. We're getting back to a more normal market. We're getting back to a market where you gotta actually, read the fundamentals, understand the business, understand their moat, understand where they generate their money, how they generate, how profitable they are. All of these things that actually, is what makes an investment an investment. And those of us that pick these proper companies will be rewarded over time. It's no more a market where you just throw your money and you see a stock, double, quadruple, 10x in the next few weeks. Those days are done. I don't think they're coming back anytime soon. So, we can get back to our roots here on this channel and focus on valuations. And it's kind of a bittersweet feeling because unfortunately, a lot of people left the market in the last few months and they're probably never going to return again. Probably gonna go tell everyone it's a scam, don't invest in it, you'll lose all your money. And unfortunately, guys, that's just the cycle, that's how things go. But trust me, as someone who's been in the market a little longer than just 2020, I can tell you that we're entering a more sustained market, a more stable market, and a market that I personally enjoy investing in much more than this whole speculative maniac that we've been in recently. But anyways, here's my plan for myself, and if you choose to stick around for this channel as well, what I'll be doing is primarily on this channel now with my future videos, I'll be going back to my roots. I'll be focusing on sound companies, doing some more fundamental videos, talking about the business, talking about the balance sheet, about their growth, about their assets, all this kind of stuff. You'll see a lot more videos like that. I have quite a few planned here, which I think you guys will enjoy, and some of them I'm personally buying as well. So if that's the kind of content you want to see, subscribe. Make sure you're subscribed, turn the bell notification on as well, and you'll be notified as soon as I upload. Also, if you could take a second, comment down below on some companies you want me to take a look at. And please make sure that they're, some decent companies. I'm not going to do this on penny stocks, tell you that straight up. Probably not going to do this on SPACs either, unless there's something really, really compelling about them. But if it's a solid company with a strong business, strong fundamentals, it's definitely something that I will consider looking at. Now, the reason I want to focus on fundamentals and focus on valuations is because that's what the market is rewarding right now. If you recall, in recent weeks, I made a video on Lockheed Martin, made a video on Salesforce, made a video on Facebook. All three of these companies are doing extremely well because we focused on the fundamentals there. We looked at those businesses and we saw that, for what the business produces, they were trading way too cheap. And I know that, you may be holding some great businesses right now like Tesla, Palantir, Teladoc, great companies, but their stock prices are down quite significantly still, and that's just part of the market cycle, guys. We may have a couple of years of sideways movement in these kind of stocks that saw huge run-ups in 2020, but if you actually do believe in the long-term story of these companies, I don't see any other way than just continuing to hold and continue to dollar cost average in, lower that cost basis, and then reap the rewards when it does come over the long term. Maybe some of the companies that corrected over the last few months deserve to be at the price that they're at now. but I think a lot of them just got dragged down because of the whole speculative bubble, the high growth stock bubble, tech stock bubble really popping. And that's where I'm looking to spend a lot of my money right now, a lot of my time in right now, in businesses like I talk about on the channel, right? Peloton, Splunk, Spotify. These companies have huge potential going forward because they kind of got dragged down with this whole bucket of stocks, but they're kind of like the cream of the crop of these type of stocks. So I think they'll recover, they'll do just fine over time, and we just got to be patient there. And just so you know, for example, Splunk, one of the investments that I talk quite a bit on this channel about, I think that one actually has a potential to 2 to 3x my money over the next few years. So those are the kind of opportunities that we're presented with right now. It's not going to happen overnight. It's not going to happen in a few weeks. But if we just have a long-term mindset, we can realize some huge profits over time, guys. I've done this before, and I think it's going to happen once again. So I'll leave you with this. Stick to your conviction, stick to your fundamentals, do your analysis, do your own due diligence, because this is not a market where you just want to throw your money in and just hope that it goes up over time. Because companies that don't produce and don't deliver, they're not going to do well in this environment. They are going to get punished by the market, and that's just the reality of the situation right now. Anyways, guys, I hope this video was useful. If it was, like goes a long way. But anyways, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.